morning and realizing that the money sitting in your bank account isn't exactly what you thought it was. I mean, every single day, over $5 trillion are quietly zooming across the global economy through systems like the SWIFT network. Think about it. People are buying groceries, companies are paying their staff, governments are borrowing, and investors are trading. But behind all of this frantic daily activity exists this absolute powerhouse of a system that most of us rarely, if ever, stop to think about. It's literally the silent machinery controlling how money flows across the entire planet. Okay, let's dive into this explainer and uncover how this machine actually operates. Seriously, ask yourself, where is your money right now? If you just got paid, or maybe you've got a savings account tucked away, you probably picture those funds just sitting idly in a personal account with your name on it, waiting patiently for you to use them. It's a really comforting thought, right? But I have to tell you, it's a complete illusion. Your paycheck doesn't just sit there gathering dust. To truly grasp the modern financial system, we first have to completely shatter this idea of what happens the very second you hand your cash over to a bank.
Section 1. The bank vault illusion. Let's look at the myth versus the reality.
Now, what's really interesting about this slide is how it perfectly captures our assumptions. Most people think banks simply act as a highly secure storage unit. You deposit your salary, the bank locks it away in a giant, heavy vault, and whenever you need it, you just take it out. But the reality is entirely different. Under a system called fractional reserve banking, when you deposit your money, the bank doesn't just lock it away. Instead, the system immediately puts your money to work. It uses your hard-earned funds to create loans for other people. And this fast-paced reality is exactly where the financial system begins to operate in a completely different way than we'd expect.
Section 2. How money multiplies, or the lending cycle.
Let's walk through this step by step. Imagine you deposit $1,000 into your account. The bank doesn't keep the full amount sitting there. It holds on to a small required reserve and then turns around and lends a large chunk of your $1,000 to someone else, maybe a neighbor using it to start a small business, buy a car, or put a down payment on a house. That borrower takes the loan and spends it, paying the car dealership or the local business owner. And here is where the magic happens. That business owner takes the payment they just received and deposits it straight into their own bank account. And guess what? That second bank can now lend out a large portion of that new deposit all over again. We call this the money multiplier effect. It's like a financial boomerang. The exact same money moves through the economy over and over and over again. Because of this endless lending and redepositing cycle, which is totally dictated by those reserve requirements we just mentioned, your original deposit doesn't stay as just $1,000. Mathematically, it can eventually turn into several $1,000s actively circulating throughout the broader economy. It's basically an engine that constantly expands the reach of every single dollar. Section 3, the interest profit engine. Let's look at how banks actually earn. So, while the multiplier effect helps economies grow, the real profit engine boils down to what's called the net interest margin, and this brilliantly illustrates the massive gap at play here. When banks lend out money, which, remember, is your money, they charge borrowers a high interest rate. At the exact same time, banks pay you, the saver, a much, much smaller amount of interest for keeping your money with them. That huge disparity between the large interest charged to borrowers and the tiny sliver paid back to depositors, that becomes the bank's profit. Multiply this across millions of loans and mortgages, and it becomes a truly enormous source of income. But wait, it gets bigger. This interest engine extends heavily into our daily spending habits, specifically with credit cards. Now, credit cards are tools that allow people to spend money they don't actually have yet. It's incredibly convenient for us, for sure. But for banks, it acts as a wildly powerful profit machine. If a credit card balance isn't paid off quickly, compound interest kicks in, aggressively snowballing against the consumer. Because millions of people globally carry unpaid balances month after month, those compounded payments grow massive. We're talking about banks collecting staggering amounts of interest globally every single month. Section 4, the hidden microfee machine. Beyond just interest, the system hits you with a daily, relentless barrage of tiny charges. Account maintenance fees, ATM withdrawal fees, transfer fees, late payment penalties. Individually, these charges might only be a couple of bucks. They feel like tiny, almost invisible cuts to your checking account. You barely even notice them. But here is a truly staggering reality check. U.S. banks alone rake in over $8 billion a year purely from overdraft fees. $8 billion. So the crucial point is that while a $2 ATM fee or a $30 overdraft charge seems totally isolated to you, it is actually part of a highly deliberate mathematical strategy. When millions of people around the world pay these small, seemingly insignificant charges every single day, they relentlessly add up.
They create these massive, continuous streams of revenue that fund the banking sector, right alongside their massive interest profits.
Section 5. The global financial network. Trillions in motion. All right, let's zoom way, way out. At this global level, we are no longer talking about thousands or even billions. We are talking about trillions of dollars in assets. Trillions. Gigantic financial institutions and massive asset managers like BlackRock or Vanguard oversee these mind-boggling sums, and their decisions dictate exactly how money flows constantly through digital systems, across international borders, and through global markets like the Forex exchange. The sheer scale of the assets managed by these entities is so vast that their moves can literally influence entire stock markets, shift currency values overnight, and completely reshape national economies.
It creates this fascinating high-stakes domino effect from the very top of the financial food chain all the way down to the wallet in your pocket. When central banks make a decision to tweak interest rates, it triggers a massive cascade. Instantly, stock markets react to the new rates. Following that, businesses change their investment plans. Maybe they decide to build a new factory, or maybe they hold off on hiring new staff. And finally, you and I, the consumers, adjust our everyday spending based on those broader economic shifts. It's one enormous, interconnected web that never, ever stops moving.
Section 6. The power of awareness and your actual role in finance. Look, it's important to state that the modern financial system has helped build massive economies, fund businesses, and create countless opportunities around the world. Understanding the gritty mechanics of banks, loans, and interest doesn't mean we have to reject the entire system. It simply means recognizing the complex machinery that drives our global society and acknowledging the systemic benefits it has provided in building the modern infrastructure we all rely on daily. Let's move to and see how this builds a connection right back to you. Understanding how money moves gives you something incredibly valuable: perspective. Every single transaction you make, every time you deposit a paycheck, sign for a loan, or even just swipe a card for your morning coffee, you are actively contributing to the flow of this global financial system. You aren't just a bystander. You are a functioning, breathing part of this enormous network. And once you step back and see how all of these pieces fit together, from the money multiplier effect to the micro fees to the sweeping decisions of central banks, you realize something pretty profound. Money isn't just a simple currency we use to trade for goods. It represents influence. It is power. And understanding that power is absolutely the first step to truly navigating the modern world. So the next time you log in to check your bank balance, ask yourself, what is your money actually doing right now, and who is it really working for?